Welcome to this week's edition of Trades of the Week with myself, Keith Sullivan. And as you can see, unfortunately, we don't have Dennis or Marcus here. Nothing to worry about. They are just taking a well-deserved break on holiday. So during today's episode, we are going to be looking at what stocks we're getting into and out of. Have we taken any profits with our investments? And we're going to be talking about FTX and their crazy returns that they've been getting during 2022. So stay tuned for that and see how it's actually affected the FTX price. So let's get into it. Okay, but before we start, an amazing announcement that we have our free, completely free Stock Masterclass coming up on the 3rd of September at 10 a.m. in the morning. It's going to be a full day event where we're going to be talking about what is the stock market. We're then going to be looking at simple strategies that we can use and actually how we generate profits while only using 20 minutes a day. So the link is going to be in the description below. Please don't miss this. It's going to be a full 6-hour day with Marcus de Maria himself, taking you through the world of investing and trading. And once again, it is completely free. So make sure you click the link below and join us on Saturday, the 3rd of September. Now, let's get into the stocks and see what's happening. Okay, so the first stock that we're looking at is ACI, Alberta's Company Incorporated. And as you can see with ACI, we almost got stopped out. It was a couple of cents away from our stop loss, but now the market has gone back up to giving us a small amount of profit. Nothing to write home about just yet, but it is an opportunity now, maybe as the market carries on creeping up, to move our stop loss up to lock in more profits. Talking about locking in profits, we also have PAYX, so Paychex Incorporated. And once again, here we have now locked in 2% profit on our overall account. So when the market does fall and triggers our stop loss, if it does fall, obviously we want it to carry on going up because we want to make more money. But if it does fall, the worst case scenario is we get taken out at a 2% profit. And once again, that's not 2% on the trade, it's 2% on our overall portfolio, which isn't bad going. The next one we have is COTY. We've been in this for a while, and with COTY, we have been in a slight loss, and the market after yesterday gapped down back into small amounts of profit. But once again, it's not enough for us to move our stop loss. So hopefully over the next few days to weeks, we're going to continue seeing this drop, and we can then move our stop loss in and milk the cow. We also have MRK. Market has been moving up, moving up, moving up. Last week, we moved our stop loss to break even. We had a bit more of a pullback over the last few days, nothing too drastic, but we are still seeing bullish momentum up. So we now have to wait for our next profit margin before we can move our stop loss up and lock in 1%. So hopefully that's going to happen over the next few days. We also have the Chef's Warehouse, and here we've been on an upwards trend since the 7th of March. We did get triggered in last week with Chef, and the market has pulled back down to that level of support, but currently we are at break even. Okay, so it's currently sitting around our entry point. So we are not losing money, we're not making money. We now just have to see what is this stock going to do over the next few weeks, and is it going to push higher for us to now move our stop loss once again. And last but no means least, we also have ABMD, Biomed. Okay, and here we are currently trending downwards since December. So we've had our first bounce, second bounce, and we've actually now locked in break even on this trade. Now, what does that mean? It means if the market continues back up to that break even point, we'll be taking out the trade with 0 loss. Okay, so we wouldn't lose any money. So now we've got break even locked in. If it does continue further down, we're then going to start locking 1, 2, 3% profits in as long as it continues to fall. So that is the current update on the stocks that we are currently trading. But before we go into new stocks, let's have a look at what's actually happening in the economy. And in regards to the economy, nothing too drastic has changed. The news of the economy, sometimes you have weeks where there's lots of news happening, and some you have really slow weeks. It's just natural. So not really much has happened last week in regards to news. The only thing that did happen is the FOMC minutes were released, where the Federal Reserve said they are still going to be very hawkish on increasing interest rates. And what has that done to the market? When the market was going up, okay, over the last few days to weeks, we've seen euphoria come back into the market. Everyone was like, yes, it's going up. I'm making money. I'm making money. And now reality is actually kicked in. Yes, inflation is decelerating. It's still above 8%. It's still way too high. And now the Federal Reserve minutes have really come in and it's put the reality back into the market. I'm going, wow, the Fed are still going to need to increase interest rates, which means we could still be in a rocky time for the market. Now, if we have a look at actually what has happened, we'll head over to the US 30. This is the 30 largest companies in the US. And as you can see, over the last few weeks, we see that the market was making high, 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 low scenarios. This is naturally what we see in a bullish market. The market rallies up, it has a pullback, it goes up again, it has a pullback, it goes up, because nothing could just go up in one movement. Nothing could be parabolic. Think of it like a sprinter. You can't just sprint full out all the time. You've got to sprint, take a breath, sprint, take a breath. And that's what the stock market does as well. So we've seen a big push up. We're now taking a breath. And if we start seeing the market fall down to the 32,000 mark, then potentially we could see a drop lower. But at this moment, we're just in a healthy correction, which then could cause the next leg up. If we have a look at fear and greed in the stock market, we are now neutral. We're kind of drifting back over to the fear side, but we're actually neutral. So what does that mean for us? It just means we're going to be hedged in the market again, because the market could either go up, it can go down. And I know Marcus loves that. It will do one of two things, but it's so true. Right now, we don't know which way the market's going to turn. So we want to be hedged with our buffalo, so going long and short. And we also want to be prepared if the market drops for us to reinvest our money back into our VCA, so buy more shares at lower prices. Or if the market continues up, we're then going to start looking at taking profits. With that being said, let's have a look at three new opportunities that we've been looking at this week. And remember, we've said about we must be hedged in the market. So the first one we had was BHF, so Bright House Financials. And with this, we've been on a downwards trend since February the 10th, where the market made a high here to a lower low, lower high to lower low, showing that the trend is getting stronger. And then we got triggered in on Friday, so us and our members got triggered in on Friday, and then the gap yesterday has taken us around 0.5% profit. So we're around 0.5%, nothing right now we can do with our stop loss. So we're just seeing over the next few days, does this continue to fall? And we get a really nice risk to reward on this, 4.59%. Now, what does that mean? It means for every $1 we risk, we're making $4.59 back in profit. So this is a really good risk to reward. Unfortunately, it had pushed down yesterday. The next one we had is exactly the same scenario, but this is the Cheesecake Factory. And we always say cake looks pretty good. And it's true in both sense. It looks good as a chart and it looks good when you're eating it. But with cake, we are seeing a downward trend once again. We did get triggered in on Friday with our entry. So let me enlarge the screen. So we got triggered in on Friday, and then yesterday the market fell even further, giving us a bit of more profit. So around, once again, 0.5% profit in this trade. If it does continue lower, we could potentially make 3.14%. Okay. And I know what you're thinking. You're like, oh, trades a week. Yeah, okay, you've got in both of these trades. What can I do with this information? Right now, if it pulls back, we can maybe get an entry, the same price we've got. But we do also have a new opportunity. And this is why we are hedged, because we don't know which way the market's going to go. So we are now looking at Stride Incorporated. And what we're seeing is a level of support that has been formed since March. So as you can see, the market has made higher high, higher high, showing a strengthening trend, and then higher low, higher low. And currently it is sitting at our level of support after a bit of a pullback yesterday. So we're currently sitting on a level of support where, sitting at our entry level, sorry. And we have an opportunity to now enter exactly the same price as we did, because we got entered in on Friday. So this is the pullback that we were looking for. So if you're not in this and you're looking at a long position, potentially, remember, not financial advice, but this could be an opportunity for you. So currently sitting our entry price, we're not making or losing any money on this, but we've got a really healthy risk to reward of 4.81, once again, every $1 we risk, we could potentially make $4.81 back. So a nice, healthy opportunity there. So that is really it with the stock market. A bit later on, we'll go over to our investments and what we're doing. But let's dive into the world of cryptocurrency and actually what is happening in the crypto market. So structurally, let's look at the structure of Bitcoin right now, because obviously Bitcoin, Ethereum, and a lot of the other coins have been increasing in value, exactly like what we've seen with the stock market. Now, with Bitcoin, we're currently sitting on a predetermined level of support. So we have seen a short-term upwards trending channel where the market hit support, buyers came in, hit resistance. Once again, buyers came in and buyers came in again. So structurally, we are seeing a bit more of a retreat, a bit more of a recovery in Bitcoin. Now, if this continues, our first level of resistance could be potentially around 32,000, because this is the last time the market came to this level and then fell. So we could potentially be trying to trade back to that level over the longer term. Now, are we saying this is 100% going to happen? No, because we do not know. But this is exactly what we are seeing happening at the minute while it's following this channel. Now, if it doesn't do that and it actually breaks through the channel, then we could be expecting the retest around the 20,000 mark once again. But don't run on FOMO, the fear of missing out. The strategies, if Bitcoin goes up, our strategies say what we need to do. If Bitcoin falls, the strategy tells us what we need to do. So we are covered for both scenarios. And that is the best thing about strategy, is you don't then need to predict the market. You just need to know what is the strategy telling you you must do if the market does X, Y, or Z. Okay, so as say with a lot of the cryptos, it has been a short-term recovery, but there's been a bit of news out, and let's quickly go into the news. The first bit of news is about PayPal, and I know PayPal is a stock, but obviously over the last year, 2 years, they've been trying to incorporate cryptocurrency into their business, right? People were trying to buy and sell crypto and actually pay with crypto, and that's what PayPal has started to incorporate. Now, PayPal is joining something called Trust, okay? And Trust is, I believe, 38 exchanges or 38 companies who offer crypto in regards to buying and selling to become regulated. So there is 38 exchanges within this. You've got the likes of CoinBase, obviously now you've got PayPal, you've got Binance, I believe Huobi was in there. So you've got companies within this trust, okay, just to become regulated. Now, what does that mean for PayPal? It could mean that this regulatory trust could then help increase PayPal's price. So it could have a positive impact on PayPal as a company and help stimulate longer-term growth if they are trying to adopt and utilize the blockchain and cryptocurrency. So it gives them another weapon to their arsenal, as they say. So that is the news around PayPal. But what we are all here for is FTX. And FTX, over the last few years, we've seen massive amounts of growth. Now, if you don't know FTX, this is a global exchange, just like Binance, just like Coinbase, which allows people to buy and sell and trade cryptocurrency. And quite recently, I'm not sure if many know, but they have now branched into stocks trading and investing also. But why is FTX around in the news? It is one of the fastest growing exchanges. Other than Coinbase and Binance, I believe it is the third largest exchange that people are utilizing. Now, with revenue, they've actually generated 270 million revenue in Q1. So that's just the first quarter, and they've generated 270 million in revenue just Q1. They're outperforming a lot of other exchanges, but the big news is they are on track to meet their goal of 1.1 billion revenue in the whole of 2022, which is not bad for a crypto exchange. So 1.1 billion in revenue. Now, it's all well and good knowing these figures and knowing what they're doing. They're expanding their roadmap. They're expanding their clientele. More people are utilizing it. Keith, it all sounds great. What does this mean? We always have to ask ourselves, what does this mean? Now, if we have a look at FTX, and the ticker is FTT, we are currently down from the high around 50% down from the high. Great time to invest if you are looking at an investment for FTX. Now, obviously with FTX, we've been in a longer term investment since the high up here, which then means the market is down 68%. So it depends on where you are saying this is my current high. But with this news, with this expansion in revenue, with the expansion in clientele that they're using, and also branching into the stock market, their roadmap is looking very, very promising. So once again, this isn't financial advice. We're not telling you to get into FTX because we can't do that. But it's a position that we have, and it is down 50% from the high. So it is a great opportunity if you are not fully invested into exchanges like into Binance or invested into Coinbase, for example. FTX could be another opportunity for you. Other than the news around FTX and what is potentially happening, we haven't really seen too much movement in crypto. The market has been slowly moving up. We have seen higher highs, higher lows being formed short term, but it's not enough for us in regards to profit. So we've done our accumulation, the market as it fell. Now we're just waiting for profit to be generated. So we're waiting for the market to go up enough for us to milk that cow. So don't worry, over the next few weeks, if the market continues in this trend, we will be milking the cow with our CCAs and our small caps. So that's really it for the crypto news. As I say, nothing too drastic or interesting that has changed the market. But really good opportunity, actually. But we haven't really added any new opportunities with crypto itself. So let's move into the stock market and our investing with VCAs. So with the VCAs, we had two opportunities here with PAYC. So we have now been triggered out at a 20% stop loss. So we've actually made 20% here on the money invested. So as you can see with Paycom, we invested at the high, got in at 20, 30, 40, 50% drops, and then the market's recovered enough for us to get a 20% profit. So it rallied up. It has now pulled back, so we've been triggered out. I believe yesterday we got triggered out. The other one we have is Chipotle Mexican Grill CMG. And once again, we've been investing as it has been falling from the high. So 24%, 34%. The market's now had a nice, healthy push up. And we've now locked in 20% of our stop loss. And this is on the money invested. Okay, please be aware, this is on the money invested. So we've now got a 20% stop loss on the money invested. So if the market then does fall down to our stop loss, we've taken profit. Obviously, we want the market to continue higher so we can now carry on moving up past stop loss to lock in more profits. But 20% is not bad on the money invested. And remember, it's never one investment that's going to make you a millionaire. It's the compounding factor of numerous investments. Okay, 20% here, 20% there. And that compounding factors is really what's going to grow your account. Other than that, not much more that we've done with our VCAs, but we have looked at a new opportunity with FMC Corporation, currently down 20% from its high. Now, if we have a look at FMC, fundamentally, we have a nice, healthy market cap. We've got good income. They're generating a good amount of sales. We are also seeing a debt to equity ratio. So their debt longer term is becoming lower, which is great. Earnings per share is growing year on year, which is perfect for us. They're paying good amounts of dividends out, and they've got a good level of return on assets, equity, and investment. So we believe that this is an opportunity. So fundamentally, the company looks good. It looks strong. So we believe this is a good opportunity for you to invest. Now, once again, this is not financial information. We're not telling you you must do this, but it is an opportunity that we are adding to our portfolio. So we're currently down at 20% here. So we have now entered in at a 20% drop, and then we're going to be entering as the market drops even further. Other than that, not too much more we've done on our VCAs. The market, as overall market is still going up, our VCAs are still going up. And throughout the weeks, we're then going to be locking in profits like we did this week and last week. So that's really it for this week's trades of the week. But let's actually have a look at the results before we end today. And this is since August 2020. So with Buffalo, we are currently up 6.42% on our overall account. We've not taken any profits with Buffalo, but we've moved up our stop loss to lock in profits. VCA, we are up at 1,076% on the money invested, and that is an added 20% on the profits that we had taken. Not too much happened with the crypto market. We were still accumulating, so we haven't really had time to take profits just yet. But with CCA, we are up 1,510% on the money invested. And for small cap, it's 4,320% on the money invested. So that is this week's trades of the week. But before we leave, please do not forget about the free, completely free Stock Market Masterclass, the 3rd of September with Marcus de Maria, where he's going to introduce you to the stock market. Use the link below. It is a full day event. We'll start at 10 o'clock in the morning, UK time. All details will be used on the link below. And also don't forget to hit that alarm bell, hit the subscribe button so you can keep up to date with the new content that we are doing every week and never miss an episode of Trades of the Week. So for myself and just myself this week, hopefully Marcus and Dennis will be back next week. But for myself, I wish you an amazing week and I look forward to seeing you on the next episode of Trades of the Week.